Hello, I'm Rachel and you're watching Kalkine TV live from Sydney. This is the Stocks in Action show. Now, firstly, shares of media and entertainment giant the IVE Group were trading up today as the company announced it'll be acquiring all of retail display and 3PL business Active Display Group and the Melbourne-based AFI Branding Solutions company. Now, Active Display Group is a known creator of point-of-sale display, print, visual merchandising, retail, fit-out and signage. And AFI is a fabric signage printer. The total cost of purchases are $6.5 million and $5.2 million. $1.3 million of the total payables will be paid as deferred consideration based on the achievement of agreed revenue targets over a 24-month period. The IVE Group stated that the said acquisitions are likely to contribute annual revenues of around $45 million. Additional earnings before interest, taxes, depreciation and amortization of $6.5 million and net profit after tax of $4 million. That's after the full integration of ADG and AFI into IVE's operations. The IVE Group has funded all the acquisitions from its cash reserves. Next up, the Aventus Group saw its shares climb today as the company signed a scheme implementation deed with HomeCo Daily Needs REIT and Home Consortium, a unit in the Aventus Retail Property Fund and a share with Aventus Holdings will merge with HomeCo Daily Needs REIT and Aventus Holdings will merge with Home Consortium. Aventus Group shareholders will receive 2.2 HomeCo Daily Needs REIT units and either 28.5 cents in cash or 0.038 Home Consortium securities per Aventus Group security. The implied offer price is $3.82 based on HomeCo Daily Needs REIT and Home Consortium closing prices on the 15th of October. It's at a 15.3% premium to Aventus Group's last close of $3.31 per share on the 15th of October. Now, Aventus Group shareholders will continue to receive quarterly distributions from its up till completion of the merger. The Aventus Group board unanimously considers the merger of the best interests of its shareholders and recommends them to vote in favour of it in the absence of a superior proposal and subject to an independent expert's report. Now, Australia-based gold exploration and production company Ramelius Resources shares were trading down today. That's as the company announced a recommended takeover offer for Apollo Consolidated. Ramelius will be acquiring Apollo Consolidated, 100% owner of the Lake Rebecca gold project in WA, via a recommended off-market takeover offer. Located in Australia's premier gold province and with a current total mineral resource estimate of 29.1 metric tonne at 2.1 grams per tonne for 1.1 million ounces. Lake Rebecca provides a highly attractive platform for the potential future development of a new production centre for Ramelius. Now, Ramelius has the financial capacity, operational expertise and exploration expertise to continue expanding the existing mineral resource and also to develop Lake Rebecca in order to maximise the value of the asset for both sets of shareholders. Well, now it's time for a very short break, but stay tuned for more trending updates.
Hi, I'm Sage, and get ready to take the crypto ride with me on Kalkine TV. Watch the Crypto Buzz every Tuesday and join the excitement at Kalkine TV. From Bitcoins to NFTs to Dogecoin and DeFi, we have updates about everything around these digital currencies. Understand the investing rationale and the risks involved in the space with me, Sage, on Crypto Buzz. Keep watching Kalkine TV.
Hello, welcome back. Rachel here live from Sydney and you're watching the Stocks in Action show. Now, shares of Hub24 were trading down today. That's as the company entered into a scheme implementation deed with Class for the acquisition by Hub24 of 100% of the ordinary shares in Class by way of a scheme of arrangement between Class and its shareholders. Hub24 believes that the proposed transaction would accelerate the company's platform of the future strategy, consolidating its position as a leading provider of integrated platforms, technology and data solutions for financial advisors, accountants, private banks, licensees, stockbrokers and their clients. Now, additionally, the combined business will provide a compelling and unique competitive advantage and diversification of revenue. Class shareholders will receive one ordinary Hub24 share for every 11 ordinary class shares held, plus 10 cents per ordinary class share. The implied total consideration represents a 52.8% premium based on the 1-month volume weighted average price for both companies up to the 15th of October. Shares of the GPT Group were trading up today as the company acquired a portfolio from Ascot Capital, including 23 logistics assets and one office asset for $681.7 million. Settlement of the transaction is expected in November. The acquisition will increase GPT's investment portfolio weighting to the logistics sector to 26%, driving it closer towards its medium-term target of approximately 30%. Growth in the sector will also be observed through GPT's logistics development pipeline, with an expected end value of approximately $1.4 billion. GPT says the acquired portfolio is 75% weighted to Eastern Seaboard states and the ACT. The 23 logistics assets acquired, totaling 161,700 square metres of gross lettable area, are located across Australia and are fully leased with a weighted average lease expiry on the 30th of September of 9.8 years. Shares of malt distiller Lark Distilling were flat today as the company entered into a binding agreement for the acquisition of Kalkine family Shine Estate, owner of the Pontville Distillery and Estate. The acquisition will be for consideration of a new 1 million litre distillery on the acquired land and to accelerate Lark's export strategy. Total consideration payable is $40 million, out of which $38.5 million will be in cash and $1.5 million in Lark Distilling shares. For funding the acquisition, Lark Distilling is undertaking an equity raising of around $53 million, consisting of a fully underwritten unconditional placement worth $46.5 million, alongside a non-underwritten conditional placement worth $6.4 million. A total of 10.6 million new fully paid shares of Lark are to be issued, about 16.8% of Lark Distilling's issued capital. Now, Pontville shall be its third working distillery in Tasmania and is to contribute to in-house production of 576,000 litres of its whisky production each year. Lark Distilling will start distilling from February 2022 at the site. In addition, the company's already started planning for the construction of the Greenfield distillery at Pontville site, which is to be commissioned in 2023. Well, that's a wrap for the show, but keep watching Kalkine TV for more trending market updates. I'm Rachel, signing off for now.